Rwanda Abroad and One Nation Radio. We appreciate your participation, and we've been talking about money and other issues we face as immigrants, as Africans living abroad, living in the diaspora. Especially, we've been talking about the challenges as immigrants we face in diaspora, and we initiated this conversation talking about some of them. So today we want to talk about money, and we invited some experts to explain to us some of the most questions we ask ourselves, especially about how can we save money, how can we prepare our future by saving some money. So my name is Richard, and I'll be moderating this conversation. In Indiana, and I'll be moderating this conversation. But I'm joined by Immaculate Busingye and Serafine Mwiseneza and Elizabeth Shimie. So Immaculate Busingye, she is a founder and a CEO of IB Finance Freedom Solutions, a premier consulting firm specializing in financial planning and business consulting. As a licensed financial professional with extensive experience in the industry, Immaculate is committed to empowering communities through strategic guidance and financial literacy education. Her mission is to enable individuals and businesses to make informed decisions that lead to long-term success and financial security. Immaculate has a bachelor's degree in economics. She has a master's in business and administration, and she has a license in financial professional business, and she can operate in all states. She is joining us from Dallas, Texas. Immaculate, welcome to the show.
Thank you, Richard. I'm glad to be here tonight.
Okay, I'm joined also by Serafine Mwiseneza. She's a dedicated and accomplished licensed professional and lawyer in Texas and 26 other states. With a dynamic career straddling both in insurance and in real estate, Serafine brings a wealthy of experience and unique perspective to her clients. She has been in America for about 22 years, and she's in Fort Worth in Texas. Serafine, welcome to the talk show.
Thank you so much, Richard. Nice to be here.
Okay, that's good. I'm also joined with Elizabeth Shimie. She has BS and MA. Elizabeth is a distinguished leader in education and family studies. With a bachelor's in family studies and master's in leadership, she excels in understanding family dynamics and strategic management. Elizabeth has dedicated her career to enhancing educational system and supporting families by implementing innovative programs that boost family engagement and leadership in education. Her work significantly impacts creating supportive environment for families and students, making her a respected advocate for positive change. Elizabeth continues to inspire and lead with a vision of fostering strong, supportive communities through education and leadership. So welcome also Elizabeth to the talk show. Can you hear me, Elizabeth? Probably unmute yourself.
Yes. Thank you. Thank you so much for that great introduction.
Okay, so these three people are financially licensed, and they can operate in America. So they will share with us some experience, but especially we are talking about life insurance, essential for every family. I would like to start with Elizabeth. Why is life insurance essential for every family? Why do we need this life insurance?
Yes. Let me see. Do I have an opportunity to share my screen?
Sure. Can you, yeah, you will press on share and I think you will be good to go.
All
Yes.
right. So I guess we can begin with the question, what is life insurance? Life insurance is a contract between an insurance company and an individual. Basically, what you're doing, the insurance is gambling on you not to die or not to get sick, and you're gambling on yourself that these things will happen, which is pretty much a good gamble, right? Because we all know life happens. We, as human beings, we get sick. As human beings, we die. So the odds are in your favor regardless, right? So yeah, basically that's what life insurance is. And there's so many different types of life insurance, but for the sake of time, a few of them are the group life, term life, whole life, and universal life. So I think Immaculate will go in details about the differences between, or Serafina, one of them, will go into details between the differences of each one of them.
I think, Elizabeth, you can press on the one of those down buttons to make it full. I think you see the 42%. The next one, I think it's like a cup. I think if you press that one, it should be full on the screen. But if not, you can go ahead and continue. Yes, the next one, I think there are 4 dots. The next one, and it looks like a page open. The next one, yes, keep going, keep going, keep going. The next one, that one, I think if you press that one, yes, okay, that's better.
Okay.
Yes.
Yeah, so they're all different. They're all different and they all serve, it's kind of the same purpose, but if you ask me, each one is a little different, and which makes it, there should be one that's better, right? Or the best one. Usually the group life is the one you get from your job. The term life is limited. The word term means for a specific period of time. It can be 10 years, 1 year, 5 years. Whole life, that's for your whole life. And universal life, they'll expand more about it. It gives you opportunities to save money and all that good stuff. So why do we need life insurance, you ask, right? I'll start with a personal story, which is not like specifically just for me, right? Those who know me, we had a tragic incident. My mom passed away 13 years ago in a car accident. If I tell you that was the most traumatizing time of my life, I think it's even an understatement. So when we talk about life insurance, it's personal to me because I know firsthand what that means to have it or not to have it. Yes, we are a community that does Harambe, the community that comes together when somebody dies and we put up a GoFundMe and people will help. But I'm telling you, you don't want to be at the mercy of what people are going to give you. If somebody's giving you $10, $20 when this time happens, when this happens, yes, it's a good thing. And we should continue to support people when they have these things happen. But what I'm trying to say is most of the time it's not enough. They've done their best, but it's not enough. Death in America is very expensive. That was 13 years ago. But if I'm to tell you, just having the body in the funeral home cost more than $20,000. And that's just that. We don't talk about buying the plot. We don't talk about the reception after that. So you can tell how expensive it is. So yes, it is a good thing to have, right? Life insurance is a key financial tool with several important benefits. So peace of mind, I guess I talked about that, knowing that you will, when you're gone, you're not gonna do what? You're not going to leave your family in a pickle, trying to figure out how to, they're already sad. People already said you're gone, but then instead of dealing with that grief, now they even also have to deal with the whole, now what? What are we gonna do, you know? So life insurance provides a safety net for your loved ones in case of your untimely death. It can replace lost income, cover daily living expenses, and ensure that your family maintains their standard of living. That's why it's important to also know, okay, my children have been used to this lifestyle. You don't want to die and your husband or your wife now has to downgrade. You had a house, now they have to sell their home because they cannot afford to live in that home anymore. They have to go in an apartment. They're dealing with their grief. Now they're also dealing with life, you know. Okay, change in life in general. Like, okay, it's one thing to lose your friend or your relative, but it's also another thing for your entire life to change because that death happened. So yes, it's a good thing for you to protect yourself in that way and to protect your loved one. I think I talked about this, security for financial dependence, knowing that they're safe, they're set, they'll have money. If you left debt behind, they can pay that debt. They don't have to think about where it's gonna come from. If let's say, God forbid, you were sick for a long time in the hospital, medical bills are crazy and they're coming for your loved ones. So it's a good thing to have and know that that burden is not on them when you're gone. Also funeral expenses, I think I talked about that, how expensive it is, making sure it's covered, be it cremation or funeral or whatever. As Africans, we like to take people home, so that is also expensive. So if you're gonna do that, make sure, if you're telling people, well, when I die, please take my body home, make sure you have insurance. Make sure you have the money that they're gonna carry you back home, because you can easily cough 60 grand or more trying to do this. So make sure you have enough money to cover this. Estate planning. We never think about that when we're living, but what do you want to leave behind for your loved ones? People here have known a secret before we did, you know, like grandma dies, had life insurance of $1 million. Grandma most likely paid off her house. She has no mortgage, but then now because she has a life insurance of $1 million and she has 3 grandkids, they're all set now, you know. Mom or dad, God forbid, dies, and they have, at least you've left some money. You're not leaving debt behind. You're not leaving burden behind. You're leaving a legacy to pass on to your next generation, or then, you know, then the generation you have with you right there. Depending on what policy, you can use your policy to educate your kids, like the IUL. I think Immaculate or Safina will talk more about that. You can secure your children's future if you're getting it for your children or for yourself to start. You can, some insurances can give you an opportunity to be your own bank. You know, you can borrow from it, from your policy, and do whatever you want it to do. Tax benefits, death benefits from your life insurance policy are generally tax-free, which means your family gets the whole thing, you know, all the benefits without taxes. I know that firsthand, and it was mind-blowing. I kept on waiting to see if the life insurance is gonna come for, I mean, what is it called? IRS is gonna come for us, but they never did. Peace of mind. Yeah, I talked about that. Peace of mind, knowing that your loved ones are financially set and they're going to focus on grieving and moving on. How do they move on from the tragic that has just happened to you? Well, thank you so much for listening. And I hope that cleared up some things.
Elizabeth, I have a quick question. And I remind everybody, if you have any question, please let us know. Let us know in the comment or just ask for permission. You can go ahead and talk. So you said if somebody dies and they want to get buried back home to Africa, they need to have the money. So normally, how does it happen if I die? Like right now, if I die and I don't have insurance, normally, how does it happen? Where do money come from?
So usually that's the thing. If you die and you don't have money, what's going to happen? Your community is going to rally around you. And that's if you're lucky. If you're a person who's known, somebody who's been a member of a community, because some of our people come here and they keep to themselves, nobody knows them, and then you're left with your family trying to figure everything out, right? But your loved ones are left at the mercy of well-wishers who will fundraise and do a GoFundMe and try to see if they can raise that much money. If they can't, then they're left with options of maybe cremation. That's the cheapest thing, but it's also not that cheap if you've left your people in a dire situation. So yeah, basically that's it. Or they can leave the body at the mortuary and the government kind of buries you and they will just cremate you as well, because they don't give. I think the government gives your loved ones about, I don't know how much it is right now, but when my mom died, I think we got like $300.
So if I have the insurance will take care of everything.
Exactly. In your insurance, if you have the insurance, that money will help you pay for everything, all the funeral expenses that you're incurring. Yes. That's why it's important to have.
What about my family?
So they'll give the money. So you'll have, they'll give the money to your family, and then they'll whoever your beneficiary is on your policy, they'll get that money, and then they'll know how to deal with all the funeral expenses and everything. Yeah.
Okay. Thank you, Elizabeth. Thank you for the good presentation. And I see some have comments, but we get back to you. Let me give the floor to Immaculate. I think previously we've been talking about types of insurance, but there is one of those insurance is the best one, the IUL. Can you tell us more about it? Why is the IUL the best life insurance among the other options we have?
Thank you so much, Richard. Thank you so much, everyone, for tuning in tonight. It is always a pleasure to have this kind of a talk. For us, really, it's not about a presentation. It's about a talk from the heart, talking to each other, discussing and finding ways that you can actually help our families, save our families, like Elizabeth beautifully put it down there. So most of the time, really, when we talk about life insurance, it feels like it's dead. And I wonder why we call it for death when it's called life insurance. Like Elizabeth beautifully put it out there, really. Life insurance is for the living. Because remember, like our sister Elizabeth was saying, when your loved one is gone, the loved one is gone. The rest of the issues, the rest of the problems are left with you, with the living. So that is why they call it life insurance. Remember, the current life insurance we have, even before I go into the IUL, they all come with living benefits. Meaning what? Even the insured, you, Immaculate or Elizabeth or some who took the life insurance, you can actually benefit from the policy or the product while you are living. So when your loved one is gone, you're going to grieve. You're going to find time to grieve, but you're not going to to grieve and then stay with the issues of what do we do now? My mom, my dad is gone, and they are gone with the check. You don't want anybody to go with the check under 6 feet because you're not prepared. Because yes, the father is working, they have a good job, they have a great job, but when they are gone, everything is gone with them. So why do they call actually life insurance? I will start with that. Life, yeah, living benefits. So let me say someone gets sick. That is one of the issues we've been tackling for the most of the time. For those ones who have missed maybe our previous presentations, we have thought so much about everyone. Everything is recorded. We can actually, we can try if Humza can actually pin in the link for our previous discussions. We can go ahead and listen to those previously. So when we talk about life insurance with living benefits, really, we talk about that life insurance that protects you now. If you die today, your beneficiaries, your children, your spouse, everybody dependent on your check will receive a tax-free death benefit. Like Elizabeth beautifully said it. If you get sick tomorrow, a critical, a terminal, a chronical, and you're not able to work, guess what? That is where you protect your income. You're going to receive a tax-free living benefits. Remember, you just sick. God forbid you're hit with a cancer, a stroke, anything that is really terminal or chronic or critical that you're not able to perform. You receive the benefits. You take care of yourself. You take care of your family. You don't have to bother or like to think about I'm sick, but my home is going to be taken. Or if you live a long life, of what I'm going to bring. The beautiful product I'm going to discuss to you tonight is the one that actually covers everything. So why Are You Well is the best insurance option. We have so many, like Elizabeth said, we have the term life. The term life, as she mentioned, it is cheap. It is the popular one because it really costs like pennies. But the good thing is it has the living benefits, as I said. But the negative part is it is temporary. She said it well. 20 years, 30 years, when it's done, it's like your car insurance. You have nothing. You lost all your money. You put all the premiums, you're not going to get anything. There's no cash back. The popular one for my friends who are professionals, the group life is nothing. I tell my friends, I don't even shy away from saying that. If you're sitting on a group life, you're sitting on nothing, because I had that for 15 years when I worked in the corporate. When I left, all the money I put in went to waste. So don't sit on a group because you're not planning to sit in that company for life. Unless you're saying that is your company staying there for life, then sit on that. But the Are You Well, that is the only policy actually that covers you for they tell you to cover all your life's what ifs. What if I get sick today? What happens? I have the living benefits, as I was saying. What if I die tomorrow? My family gets the tax-free retirement, the tax-free death benefit. If I live a long life, my family or myself will get tax-free death benefit. So we'll talk, what is an IUL, by the way? Because we keep talking about index universal life. They're telling us it is a permanent life insurance policy with a cash value component that grows based on the performance of a selected stock. So an IUL, it is a life insurance. That is not just that term, that is not just that group, but that is something that has a component of the death benefit. You're going to see it when I continue. Also, it has cash accumulation. That cash accumulation, that is what is going to actually become your retirement benefits. The death benefit component is going to protect you when you die, because it is inevitable. Everybody is going to die at one point. And it is also protecting you when you get sick, giving you the tax-free death benefit. So when you look into this, the income tax-free death benefit, the death benefit will pass to the named beneficiaries, like Elizabeth was saying. When you have an IUL, you know for sure that if you die, it's about of when, because we are all going to die. When you die, your beneficiaries are 100% covered. They are not going to struggle with you or with the bills you left behind, or with the life they're supposed to keep living. Also, the second part is the components that comes with that beautiful life, IUL, the tax-deferred cash accumulation or retirement. So an IUL gives you an opportunity to have a savings account, to have a bank into your insurance. Remember, one thing that we forget, we might have those savings account, maybe a bank account, but what they're giving us really, I always tell my people, go check on your bank statements. Look at how much those banks are giving you in return as interest. Most of them are 0.01, unless you have a high yield interest account that is going to require you to have a certain amount maybe that you don't have, and you can't even take it out. Otherwise, it's not gonna help you to accumulate much. So it's also income tax advantage distribution. For the people who have a 401k, for example, you put in your pre-tax money, you put in the seed that is not taxed. When you take out the big chunk, they're going to tax you. But with an IUL, the good thing of an IUL, you put in your after-tax money, meaning that your proceeds are going to come to you in a big chunk without having to face Uncle Sam. So nobody wants to actually lose their retirement benefits when they're no longer able to add to those. And then we have the safety and the security with IULs for those people, because usually, I usually say these presentations are supposed to be interactive. That is why we don't go into too much presentations, because we want people actually to learn as we go so that we can be able to share together. So the safety and the security of an IUL, they are telling you, since the cash accumulation account is tied to the market indices and not directed to the market, there is upside potential with no risk of principal loss due to market downturn. So that can be done beautifully, actually. If you're here and you're not quite understanding what that means, that is why we always open to do individual consultations, free actual individual consultations. We don't charge you for the consultation, to show you how that actually works. Because with the people, again, who love to put their markets in money in the markets, in the stock market, when the market goes up, hey, you're going to be smiling. But when the market goes down, you're going to cry, because you're going to lose most of the chunk of your money. But with an index account, we enjoy the market. The money is put in indices. Indices are a bunch of stocks put together. It's like how they always say that many heads are stronger than one. They put so many stocks into one, more like thousands of stocks into one, that makes it stronger. When you have your money in an IUL, you can only benefit from the upward of the market. When the market goes up, you actually enjoy the benefits of the market. When the market crashes, you actually protected from the downturn of the market, because your money or your principal will freeze there until the market rebounds, so that you're able actually to earn as you wish. Then the liquidity. The cash accumulation account has a very high level access to the client with absolute no control. So your money, the money you have in your account and your cash accumulation, it is your cash. That is why we call it a bank in your life insurance. Imagine a life insurance that gives you cash accumulation. You can access it as long as you have been able to accumulate it. Again, these are terminologies that needs actually individual consultation, so we can go deeper into explaining what those means. But again, if you have any questions on those, feel free to ask. We'll go deeper explaining those. And then they ask, why do people buy index universal life? Obviously, as we were saying, they need strong cash value accumulation, potential for tax efficient retirement planning. Remember again, if you have your money in a 401k, when you take it out, you're going to pay tax. If you have your money in an IUL, you actually not paying tax on the proceed when you take it out. So all of us, when we are young, we really work so hard so we don't have to struggle when we grow old, right? Maybe it's myself. We work so hard now because we can be able to work. Then when we get to the point where we can't work, We need to be able to access our money without having to fight Uncle Sam. So that is one of the reasons people love IULs, because they enjoy those tax benefits. They also enjoy the opportunity for the higher market gains. Remember, these IULs are tied to S&P, the Standard & Poor's, the gold, the Barclays, the real estate. Whether the market is going up, you're going to really reap everything. When the market goes down, your money is not going to be touched. So people love not to lose their money at all. Which brings us to the next point. They do not like the volatility and the risks shared with the other options. People don't like to lose their money. Your hard-earned money, nobody wants to lose it. That is where everyone wants to put their money, where it is actually safe. So as I was actually started with this part, I think I went through the whole thing. So the major component of an IUL, it has two major components, the death benefit component. Remember, it is a life insurance. We want to be protected when we die. So when I die, I know my beneficiaries, my children, my husband is safe. But also it has the cash accumulation component, whereby, what if I don't die now? I live a long life up to 100 years. I'm no longer working. Will I be able to have enough retirement funds? So an IUL has those beautiful components in there. It protects you today, whether you get sick, whether you die, you are covered and your family is covered. And then in the future, when you live a long life, you are also covered. So here they're telling us an IUL is the ideal product in the marketplace to help people build wealth accumulation for retirement in a very safe place. Obviously, it's the same thing we're talking about. That, as you can see, they tell you the growth. Growth is tied to an index like S&P 500 and other indices like Barclays, gold, Dow Jones, real estate, all those beautiful indices out there that will protect your principal so you don't lose anything. So they're telling you principal is protected with no downside risk when the index goes down. So always in an IUL, you actually have a guarantee. They guarantee you're guaranteed, your contract guarantee, it gives you a guarantee that even if the market goes down, -20, -15, you will never ever go under this limit. So we're always given a guarantee that even if the market goes down, like what happened back in 2022, at the height of COVID, the index went down like -17+%. But guess what? I had my index, it was there by then. At least we're able to earn 0.25. You see, they say zero is better than minus, really? It's good. But the next year, it jumped to 11.50. So I never lost anything. People never lost anything. But next year, when the market went up, they started gaining through the market.
Also, during the COVID, your money was locked in the IUL? Okay.
Yes. So when the market goes down, for example, different from the stock market or different from people who have money in the 401k, when the market goes down and you have money in your 401k, when the market goes down, people can check. If you do have 401k and you had it during COVID, go back and check your 401k statement. People lost a chunk of their 401k. But in the IUL, the principal, let me say maybe you had accumulated maybe 200,000. The money is going to freeze there at 200,000. And then the next year, 2023, the market went back up. You started earning the upward market, interest increase, but you never ever lose anything. You can earn a little bit instead of losing what you had. That is the protection and the security we talk about. So IUL is an ideal wealth accumulation solution for those who do not like or who like. So mostly people don't like to lose money in the market. So those people who do not like losing money in the market are going to love an IUL for those reasons out there. Protection from the market downturn. That is when the market again goes down like what happened in 2022. When the market is underwater, your index account or your cash accumulation, it is protected. Locking in of the market returns. So every time the market goes up, 10%, 11%, 12%, 13%, you lock in everything. You lock in all the compounding interest you're getting. You lock in everything. You actually earn interest on the interest as well. You don't just earn on what you put in. You earn what you put in. What you have actually earn interest on top of interest. So people who don't like to lose but like to gain are going to put their monies in the IUL. So there's no annual income tax on cash value interest growth. Entire interest is earned on top of interest. That is what they call compounding interest. So you earn from what you have and from what you earned. Everybody really loves to earn more money. No income taxes when removing money from an IUL in retirement years with withdrawals up to the cost basis. So when you're taking out your money, this is again, I believe next time we'll compare actually like 401k with IUL. When you put in your money and it is your retirement age, you're supposed to be enjoying your benefits. They're not going to tax you. You enjoy the tax-free retirement benefits. Who wouldn't love that? Obviously. And that is why we are here always, really to educate our communities, to share the knowledge, because this is very essential for our communities and ourselves. This is a summary of why. We said, why should we choose that? Why is it the only product that is actually spoken about everywhere? This is the new kid on the street. Why is it? Why should we know more about an IUL? So again, no downside risk. Nobody wants to lose. Nobody wants to lose money. We work so hard for it. Nobody wants to lose it. Very good upside potential. When the market goes up, you enjoy all the benefits of the market. Annual lock-in of the gains. So the market goes up, the index goes on 13%, 12%, 11%. You grab everything, you lock it in. Remember, you're locking it in because when the market goes down, it's not going to get out. Everything is locked in. It's never going to go out. Income tax deferred growth. Again, there is no tax on what you're earning in your index. Again, as we were saying there, income tax-free retirement cash flow. We all love to enjoy our retirement with cash flow coming in, but not having to give anything to Uncle Sam. Very strong death benefit. That is actually, because this is a life insurance again, although we have that savings in, we have our bank in our life insurance. But again, we have to remember the main reason, remember the two components were the death benefit and accumulation. So the very strong death benefit that we all want to make sure that our families are protected, we are protected, our incomes are protected. When something happens to you, that is a matter of when, because it is going to happen. We are safe, our kids are safe, our families are safe, our homes are safe, our belongings are safe. Because when the death comes and knocks, and you're the one providing for your family, everything's going to go with you. So is there anything you can leave behind that it is not tied to your check? So life insurance is the only thing that is not tied to your check or your business, because even your business can go underwater when you die, because you may have like business partners, you go and everything is gone. But if you have your life insurance, that is the only thing. Even the probate court will never touch. That is something we'll have to discuss in the future as well. Because if you have a savings account or any other account, the moment they say you're gone, everything is going to be frozen to make sure that you don't owe anything. Imagine that. But your life insurance will never be touched. If you owe anything to the bank, they can take your house, but they're not going to touch your life insurance. So we have to be smart, really. Invest our benefits where nobody can rob us of our benefits. Again, the living benefits. To me, the fact that the life insurance is called life insurance, I love living benefits more than anything. Death is bad, but it is actually more bad if you get sick and your family has to suffer while you're watching. You get a critical, you get a terminal, your home is gone under your eyes. Your kids can't go to school. They can't even feed. They're just watching you. You're dying and they're dying in front of you. So the living benefits.
And the way it was working, you come here, at some time,
Can you mute, please?
Okay.
Thank you. I think that was Judy. Can you mute, please? Thank you. Yeah, I think I was at the end of my summary. We're going to invite questions later when we're all done presenting. But at the moment, I'll stop here. If anybody has any questions at the end, we're going to be more than happy to answer anything that you will need to be answered. Thank you, Richard.
Okay, thanks, Immaculate. I appreciate the great presentation. I think if I dare to summarize what you said, I think you said that Index Universal Life Insurance offers the insurance benefits while we are living. I think that's a great point you touched. And it's the best way to protect ourselves, protect our money when there is a crisis, because our money get locked in. And the last point you talked about is that this kind of insurance, it's a best way to for tax shelter, income tax shelter. And I appreciate the presentation. It's a great presentation. If we want to get in touch with you, I will leave the contact on the description of the YouTube. And I think on the presentation, we will leave the contact, so everybody want contact them, they will contact you. So let's go to Seraphine. We've been talking about insurance, and we talked about death. We talked about when we get retired, when we no longer able to work. But is there a way we can give insurance as a best gift to our kids before we think about ourselves and retirement? Is there a way this insurance can be a blessing to our little ones?
Oh, thank you, Richard. Really, thank you so much for allowing us, giving us your platform to reach our community and share the information, how they can actually start the life insurance, the IUL, the Index Universal Life for the young ones. So when, allow me to present.
Okay, go ahead.
Thank you. So that was a great question, what you asked, Richard. Why is an IUL? How can we get an IUL for our young ones? So buying insurance is the last thing that as parents think about, especially for our children. So how can we ensure that life insurance is not only for the people that are old, okay? Life insurance is only for the adult. Can you do a life insurance, an IUL, that will benefit a child from a young age up to an adulthood, right? So it's never too late to start a saving, because when you start an IUL for a kid as a young age, you are starting this as a saving account for retirement and also as a protection, right? So
Right.
I know the older people get sick, so does the young people. The older people die, so does young people. So there's easy benefit a whole family to make sure from young to an adult, everybody are covered. So that's where the IUL comes in as the best gift you can give your youngest, okay? So and also the earlier you start putting money aside for your younger for retirement, the more time you have for them to accumulate enough income for retirement at the older age. So that being said, an IUL will be a perfect gift for any parents or grandparents to establish at the younger age a insurance program for the children or their grandchildren that will cover their retirement at the older age and also their protection while they're still alive. Remember, that will cover your sickness and also when the death to occur, which we are human, Death is a part of us. So what are the 6 ways can annual index universal life benefit our youngest ones? Okay, so being that the kids start at the younger age, it gives them the higher growth potential. So IUL account value, it grows tax defer with a triple compound. So meaning you are earning interest on your principal and also earn interest on your interest. So you are earning triple interest. I don't know if that makes sense to you. So meaning whatever money you invest today, it will earn the interest and you're gonna earn an additional interest on top of that. So that's what it gives that account ability to grow so big where you can use it toward retirement. So it also grow as a tax advantage retirement account. So since the premium are paid in with a tax dollar, so you're paying with the money you already paid tax on. So when it's time for you to start earning that income from your retirement, from your IUL, you start earning that money as an income tax free. So even on the gains, the money, because you already put in the money that is already a tax income, tax money, your tax dollar, even on the gains, when you start taking out your IUL, it gives you that flexibility of earning income tax free. Okay. The retirement income also of the IUL is protected from future potential income of tax rate increase. So the tax rate we are paying today, in the future, the tax rate will go up. But if you already have the income retirement protected within IUL, your potential your income is protected for the tax increase, because remember you are taking money out of tax free. So you start your kids out today, when they're ready to start earning income, that takes now tax free. So you can't really bet that it's really tax free if you tax free. So like, and as I was saying, so when people think of the life insurance, they're only thinking about death. So this, when you start your kids as young, you're not protecting them just when they die, God forbid. What you also protecting them when they get ill. So and that's when they get to access what we call the living benefit. And living benefit are critical, terminal, and chronic illness. So God forbid you start your children today with a policy, they get sick, they are protected. They pass away, they are protected as well. They live a long life, they get to use the money when they retire. Okay? Yes. All right. So when we say establish, when we say what is it benefit for juvenile to get a life insurance, first of all, because of their early age. So the older you get, the harder it is to qualify for insurance. And also, the older you get, the higher possibility that you are not in a good health, meaning you're already sick. So when you go apply for insurance, insurance is going to decline you because you're at a higher risk. But our youngest, when we start them at the younger age, so the benefit of them starting at the younger age is qualifying is easy. They qualify instantly because they are young and also they're in a good health. Not only that, their premium is so cheap, it's way cheap, it's cheaper than an adult. And the benefit of that, if a child, example, gets in a policy today at a younger, let's say at the age 10, the kid at the age 60, they'll be still paying the same premium as they were paying at age 10. Okay, so their premium will never increase. So you are doing your child a a good service, an advantage of putting them ahead of the game instead of let them apply, get insurance at their older age where it's cost them a lot of money. Get it where they are still young. Their premium must remain the same as long as they're alive. The premium never change. The premium is locked in. Okay. So also because of the lower premium that you pay into the IUL at the younger age, that will allow a long term for them to accumulate a bigger accumulation. So at their retirement age, they are able to take out
Okay, go ahead. Go ahead. I will ask Ngirin to mute yourself, please. Okay, go ahead.
Yes.
I'm sorry. I didn't know that happened.
Okay. Okay. That's okay. Okay, go ahead.
So because you start so at the younger age, kids have a long period of time to accumulate more accumulation, that means at the end of when they go to retirement, they have access to more money coming their way, more income coming their way, which also can become a tax-free income. So what can I tell parents? What can I ask parents today? What gift would you like to give your child today? Would you want to give them a gift of a Jordan shoes, or take the money and invest in an IUL? Because kids' policy are so inexpensive, you can easily invest for your child as little as $50 a month, and that will set your child up for future. Now, when your child gets older age, where they are finished college, they are working, you can turn it back to them, and they can go back and continue on with their policy, and they will have an ability to supercharge the policy, but at the lower premium, because they start at the young age. So as parents here today, what can we do? Do we want to entertain our children with an allowance to go to McDonald's 2-3-5 times a week? Or do we want to invest the money for our children in the IUL for juvenile, where it will set up their future for, it covers them for living benefit in case they get sick, it will cover them for in case of death, and also build up their retirement income. So that's the only question I want to leave with our parents here today. What can we do? How can we choose to save for our children? So do you want to buy Nike and Jordans every week for your child? Sure. But when your child goes to college, he has zero money to go to pay for college. Or when he's 50, he's trying to go buy life insurance because he failed to plan for them, and it end up costing him more money, or he's not gonna qualify because he's an older age, or he already have a condition, a sickness. So let's try as a diaspora, as we came here as older people, we didn't have that chance. We are young here. Let's try to see if we can set our children up for success. And success in America, every successful people, even the Rockefeller, actually IUL was in a vehicle, an investment vehicle that Rockefeller, I don't know if everybody's familiar with the Rockefeller, that's how they invest their money, their children money. That's how everybody knows the Rockefeller family, because that was a generational wealth that was built from one family to another, to another, to another.
Right.
Yes. So let's all do our best. Let's all try to build our children up, give them that foundation that we did not get chance to have, so we can set them for success. Thank you.
Seraphine, thank you very much for the presentation. But before you go, I have a quick question for you. Every time when I hear these words about financial literacy, about savings. I wonder myself, why don't we do this? Probably it's because we don't know it, or probably because I think that's the main reason, or probably it's hard. I don't know. But my question to you, you mentioned about a pair of shoes. Can the money we buy a pair of shoes for our kids be the enough for starting saving for our juveniles?
Yes, absolutely. You can start a juvenile saving account, IUL saving account, as low as $50 a month.
$50 a month?
Absolutely.
Oh, that's great. I
Yes.
think if I want to summarize what you said in one Kinyarwanda word, we say igiti kigororwa kikiri gito. If we start early, I think it will be beneficial for both, for kids and for us. So if Simeon is online, I think you can let some people talk. We wanna hear from you. Someone asked the question, but I will let them ask themselves. On the Zoom, they say iPhone 14. If you can go ahead and ask your question. I read the question, but if you can go ahead and talk by yourself about this question. I think someone with iPhone 14. And Simeon can help me to let them talk, unmute themselves. Okay, whoever has a question, go ahead and ask the question. The floor is yours, please.
Richard, may I chime in a little bit?
Yes. Can you go ahead and ask a question?
I think
Jen's iPhone. Oh, okay. Go ahead.
Yes.
Yes, go ahead and ask.
Yes, thank you, everyone. I have a question. It goes on Ima. I want to ask if I live too long and I don't get sick, what year, specific years I can start to get my money?
Okay, someone else. I think we got the question, and we're gonna answer 2 or 3 questions at the same time. Okay, Imari, okay.
Thank you guys for having me. I was the one who was writing on the chart.
Okay, go ahead.
So for my question, at the young age of 24 years old, so I know I'm still growing up, and I still have future ahead of me. So on this new guys organization, for young ages like us, how you guys say this insurance can start from $50 a month. So my question is, what about for in case of an emergency? So what do you guys do as in case of emergency? You know, like how young guys are like us, so we still haven't grown up, like you know, we don't have family, kids right there. So in case of emergency, you know how an adult needs money, you know, they're gonna see money, like they say, hey, I'm saving, but
yeah, I think it makes sense
you
if
can
you've been
get
saving
tempted.
for 20 years and 10 years and you have an emergency case. I think we get the question. Anyone else, if you have a question, please unmute yourself, then go ahead and ask your question. We have a couple of minutes to go through those questions. The last one.
For me, does it have to be for 20 years or 5 years, or
No,
does it have minimum?
I was adding on your question. Let's say I've been saving for 20 years and I have an emergency. But if you have even 1 year, it makes sense.
Okay. Thank you.
Anyone? Is there any Emmanuel? Do you want to ask any question? Okay, Roy. Yes, go ahead, Roy.
Thank you, Richard. Thank you all for the wonderful presentations that you're giving. Quick question would be, are the living benefit proceeds, do they take the same time frame to be given to the client or whoever needs them as the person, as a death benefit? And what are the steps taken towards that? And that would go towards the person who talked about living benefits. Then the Seraphine, we loved the point of the triple interest. By any chance, you said you start as little as $50? Would you know how much the maximum can be for 2024 that can be put away to a child without having tax consequences? And if not, we can always look out for that information. Thank you.
Okay.
Was that question?
Yeah, I think we got those questions.
Okay, good.
Okay, is there anybody else? If you wanna ask a question, please go ahead. Otherwise, we're gonna go and reply. Anybody else? Okay, I think Immaculate, go ahead and or Mr. Elizabeth. Elizabeth, do you wanna answer any of these questions? Then we go back to Immaculate. I think you are muted. Unmute yourself. Okay, yes. And then go ahead.
I think the first question was, can you take out your money in case of an emergency? And the answer is yes. Your cash accumulation can be used. It's yours. You can borrow out of your policy and do whatever you want with your money.
Okay. So, Seraphine, do you want to answer another question?
Yes, I'd love to, but Roy, repeat your question again for me, sir, one more time.
For Imari?
That was Roy, I believe.
Oh, okay.
My question was, you said the minimum can be as little as $50 to a child, a specific child. Do you know what the maximum, if a grandparent came out, they're rich, they want to put, hide their money to pay for the children's investment, how much can be invested in an IUL?
Okay, thank you so much, Roy. So first I'm gonna answer your question about the triple interest rate. So where the triple interest rate come from is you're earning interest on a principal, you're earning interest on top of the interest, and also you're gonna earn income tax-free retirement check. That's also interest-free. So to answer your question, minimum is $50 to start with a young child, but for me to give you specific amount of how much they can fund the account, that will require me to run an illustration.
Okay, that can be for another time.
Be another time, or we can do it today.
Okay.
Mm-hmm.
And so, but I think he talked about also death benefit. How long does it take if let's say my spouse dies? How long does it take to get the money from the insurance? How long, or does it take the same time?
The proceeds from the living benefits and the best death benefits, and what are the processes if somebody has a chronic critical terminal situation, and and on the other side somebody dies, what's the length of time, average time that you look at? Anybody?
Oh, Immaculate, do you want to go ahead?
Oh, thank you so much. That was nice. Okay, so when it comes to the living benefits, really, the living benefits, we talk about the critical, the terminal, the chronic. So the time, how much you can take depends on how severe your illness is. If you have a terminal illness, let's say it's cancer, and you stage 4 cancer, you take 100% of your proceeds. That is the living benefits for that particular rider. So the process really doesn't take long. It depends on your doctor. It's not even a doctor from the insurance company. The process would depend on how many doctors do you see. If you're like maybe diagnosed with a cancer, did you see 10 doctors? If you saw 10 doctors and they have to have a report, it's going to take a long time. But if a PCP who had everything, someone who was putting together everything, really it's not going to take so long. So the amount depends on the severity of your illness, and how long depends on how soon your doctor takes care of the paperwork. Really, it's not about the life insurance company. They'll be happy to pay you today if your doctor can actually work that everything is good to go. Hope that is clear. I think Jen had also asked something else. She was asking, if I don't get sick, at what age can I start taking out my money? Was that correct? Hope I didn't miss
Yes, I think so. Yeah, but when you are living long.
Yeah. So usually that's the beauty. Like, for example, the IUL. So the IUL, you get sick today, you take out the living benefits. You die tomorrow, you take the tax-free death benefit. If you're lucky and you live a long life, as long as you have cash accumulation in your account. Remember, that is your savings account. That is your bank account inside your life insurance. As long as you have your cash surrender, they call it cash surrender. You're supposed to surrender it, take it out. Really, nobody limits you on when you can take out your money. If you want to use it as a retirement and you want to wait until you're 65 because you're working today, that is a good choice. Because initially when the IULs were actually introduced, they were supposed to be helping people to save for their future. Don't put the money in there every year and take it out, because you're not actually doing yourself a service. Because at the end of the day, when you retire, you're not going to have anything to lean on. So as soon as you have your cash surrender or your cash accumulation in there, you can take out, Jen, really. No limit. That's why they tell you the liquidity of that, your money is open. Nobody's locking it out for you. You can take it out as long as you have it. Thank you.
Okay. Okay. Do you have any other question? I have someone. Is it Nyamar? Can you go ahead? You were raising your hand. You can ask your question. Okay, go ahead. There is a Immaculate.
There is another question actually for Imari. I didn't catch quite well. Imari asked something, the 24-year-old Imari. Could you repeat the question so we don't miss it? Imari.
I think he was asking if I have emergency, can I take the money, or actually what's the requirement? Do you face any, probably, I don't know. So what happened?
Yeah,
Okay.
sorry. So what I was saying is that 24 years old. So I was saying in case of something happened for emergency as young age as us. So we see like we're saving money, but we have you never know tomorrow was gonna be. You're gonna need money. So my question is, I was saying is, so you can withdraw the money anytime. That was about my question.
Yeah, that is actually a great one, Mabry. The younger you start, as Serafina was beautifully put it up, the younger you start, the better. Because yes, as long as, again, you have your cash. Remember, we work and put money in savings and checking. Sometimes we end up eating everything. But if you have your money somewhere where you don't easily touch, so when you have an emergency, let me say your car block, and you have 20,000 in there, you can easily get out 20,000 to pay off your car. You don't even have to take a car loan, because you have cash sitting there. If you have you want to buy a home, you're 24, you maybe want to buy a home at 25, you need a down payment for your home. If you started early and you have over 50,000, and that is what is required, yes, you can actually take it out. An emergency can be anything. That is why we save. So yes, you can take out your cash accumulation if you have that surrender in there and you use it to clear any emergencies that you do have. That was a great one, Imari. Thank you.
Okay, I think Nyamar Ruoth, can you go ahead and ask your question? Unmute yourself. Yes, and go ahead.
Yes, thank you. And you pronounce it right. It is Nyamal. My
Okay,
questions will,
good.
thank you. My questions goes to Seraphine with the juvenile IUL. I was wondering, so if you start a policy for your juvenile, can that policy specifically be for funding college or things in that nature? I don't know if you touch on that at all, or a little bit, but can you go in depth on that? Like, how would the cash value work? Or can you end the policy after a certain time? Is that possible?
Okay, absolutely. Thank you, Nyamal. So your question is, can you access the money when the kids go to college and pay for their college? And the answer there will be absolutely. Now, remember, the money in your cash value is like the money in your IUL, especially the one that goes into your cash value, is like your bank. Okay, you can access the money at any time. So if you start a juvenile, let's say you're 2-year-old today, 18 years from now, he goes to college. Whatever amount is available into his account cash value, you can access the money anytime and pay his college with the money. Now, your second question is, can you terminate the policy at any time? Yes, you can, but if you own an IUL and you see the benefit of the IUL, I don't see why you want to terminate the IUL, but you can terminate at any time. If you feel in the future this is not for you, you can terminate it. But there is no one, and I have been giving people IUL for years. There's no one that will ever get a hold of an IUL account and see the benefit, the potential of the retirement and the living benefit and the cash accumulation and death benefit that comes with it, that will terminate it. But if you feel like you want to terminate your IUL, take money out of your cash value and the policy will lapse. I don't know if that answers your question, Mama.
Okay. Thank you very much for the interaction. I think with the interaction, we get to understand more. We have about 30 people on the Zoom. Let me just ask by random two people about where they are. Let me ask Claire, can you hear me, Claire? Can you mute yourself and tell me where you are listening from? Just unmute yourself and tell me where you are listening from.
Good evening.
Yes,
yeah.
Where are you from? Where are you?
Yeah.
Right now?
I'm now in Michigan, Grand Rapids.
Okay, good. So what did you like about the conversation? Just one or two things.
Okay, I liked the way they presented the insurance. I have heard about the insurance before, and now this presentation was great. There are some new elements I learned about that account. I don't know the name. I didn't.
The IUL. Okay, thank you. Let me ask Nyahok Keng. Can you hear me? And tell us where are you from? Where are you listening from right now? I'm just selecting people by random. If you can hear me, unmute yourself and tell me where you're listening from. Nyahok Keng. Then what about Jacques Bigirimana? Yes. Can you hear me? If you hear me, just unmute yourself and tell me where are you right now? Where are you listening from? Okay. Yes, can you hear me, Jacques? What about Betty Nakibuka? Okay. Then I will ask Immaculate the last question. When do we need to buy insurance? Then when you are answering, I will share your contact, but go ahead and ask when do we need to buy the insurance? Okay, I see Ngirishuti. Ngirishuti, just in a few words, where are you from? Where are you listening from? And what do you want to say about the conversation?
Well, I would say I'm in Dallas, Texas.
Okay.
And thank you. Like, everything is good. I wanted just to recognize Emabo Malango, who is he's in Arizona. He's my childhood friend. We grew up together, and then I talked to him about this, and he wanted to hear more about what we do and everything we do. And thank him for he asked a good question on whatever he wanted to know. But Emabo, if you have any more questions, man, I'm here, and see there's a family here. This is like my family. This is our family.
Okay.
So before Immaculate proceed, I had a question that I was asked before with one of my clients, and then they were like, "Oh, if we run broke and we can't afford money to pay the insurance, what can we do?"
Okay.
So I want to bring
Immaculate
that to
will.
you guys too, so that you guys can answer it
Okay.
and
Okay,
help me out.
go ahead. No,
Thank you.
Oh, thank you so much, Richard. Thank you so much, Jody. So the first question, when? I think the earliest is now, because there is never a time. For sure, if we are realistic, the only time you know is this moment you're sitting in this chat right now. Because the moment you leave here, you don't even know if you're going to make it home, if you're not in your house. So buying a life insurance, it is the first thing you should have to think now. Don't even approximate saying, I'll do next year or next month, because you don't even know. There is an element of you losing your insurability, like the presenter said. You never know what could happen tomorrow. You could be sick, or you could be gone. So the when, to me, Richard, is now. If you can, I tell people you don't have to start so high. Start where you can afford. The good thing with this life insurance, most of the IUL, the Index Universal Life, it's very flexible. You can start with $100, $200. You can increase to $2,000. So start now, what you can afford, and then in the future, you can do as you wish, depending on how your pocket allows you to do so. So with Jadi, Jadi's question was, okay, if I started a policy now, and in the future I'm blocked, again, choose your policy wisely, Jadi. If you took an IUL and in the future you don't have money, you have cash accumulation in there, you don't have to worry, because you have cash in, you can actually use it to pay your policy. And something else, an IUL is very, very flexible. You may be paying $500 today. If you're not able to work, they will give you as low as $200, or they even give you some time. When you're ready to go back, they will allow you to go back and pay. The reason being, you have cash in. If you have cash in the bank, you can't go to bed hungry. So that is what it is for sure. So yeah, buy today.
Okay, thank you. And I think I will not say go broke or something. That's being negative. I think be a millionaire, be something, buy a house, and yeah, go ahead, don't go backwards. But yes, that's true. Life happens sometimes, but I think we should stay positive. And thank you for your patience. Thank you for coming to the Zoom live, and we recorded everything. We will share on Rwanda Abroad and One Nation. So this is the contact I just put on screen so that in the program you can see it. I appreciate your attendance and appreciate being with us. So I'll see you next Thursday. Let's meet next Thursday with another topic and talk about our financial literacy and other money related issues. So thank you for joining us.
Oh,
Thank you.
sorry. This is Francois.
Mm-hmm.
I also had a question.
Okay.
So, my brother, he's been asking me. He's in the military, and I wasn't sure how to answer him, and I told him like I will find out and let him know. Would he be able to get a policy since he's in the military? And then another question, there's this client who also asked me if he could get a cheaper life insurance, but he is 63. And I didn't know how to answer him either. So I told him I'll get back with them. That's why I was like, let me ask you guys first.
Okay. Immaculate, can you briefly answer the question?
Francoise, first of all, for the military brother, if they are active, it might be complicated. It is something we can take to F&G or AIG and find out. But most likely, when someone in the military, they are active, those are actually those are very complicated cases because they find the client is really in a situation that can be very risky. So that one is something that is an individual question we can take to the carriers and ask if that is possible. But when it comes to cheaper, again, like my friend Elizabeth explained, we don't have just an IUL. We have term people. For us, we don't limit our clients. We don't limit our clients because people's pockets are limited or even their age. As Serafina was saying, beautifully said, the younger you are, the policies will be very affordable. Even the IUL will be very, very affordable. But the older you get, everything is going to be expensive. But at the end of the day, we need to protect our families. Even the young ones, you might be in the situation whereby you can't even afford $100, but you can afford $50 to cover your family. Take what you can afford. We have term life, we have index account. Pick what you can afford today and protect yourself and your family until your finances actually go in order. So yes, the 63-year-old can get a policy at their own cost. Thank you.
Okay, thank you, everyone. Thank you for joining our Zoom, and I appreciate being here. So I meet you next Thursday, same hour, same time, and please make sure you have your life insurance. Make sure your friend, make sure your family members, they all have this insurance. Thank you for being with us. I'll see you next Thursday. Okay, bye-bye.
Good night, everyone.
Thank you.
Good night.
Good night.
Thank you.